All right, Nilesh. This budget looks like it's different because there is a problem of not scarcity, it's a problem of abundance. What are markets hoping? 2021, the budget re-rated the market. Can the same happen? And let's start with a smile on your face, Nilesh. Your fund is up more than 50% in last 1 year. So what? You're down 10% in last couple of days.
Well, thanks, Nikunj. Thanks, Aisha. It's a pleasure to be here. Well, yes, I agree. I mean, I clearly think the last year's budget was in a way a landmark budget, and it basically re-rated markets, and it changed the entire perspective both on the economy as well as essentially the markets itself. Going forward, what I would probably believe is that this budget should essentially be a continuum of what the last budget was, which means increased focus on privatization, on disinvestment, on ensuring that essentially that we do enough to kind of in a way bolster the growth. The world is expecting India to be the fastest growing economy in the world. And clearly we do whatever it takes to basically boost that. Two big areas which essentially need a lot of attention essentially is the private capex cycle. Of course, there are initial signs that that's basically on the verge of a takeoff, and do whatever it takes to basically further ensure that the takeoff is faster and sustains. The other is on the consumption side. A lot of the discretionary consumption areas didn't do as well in the last calendar year as they ought to have. And clearly there could be a lot of measures in this budget, or at least that's the set of expectation, that there will be measures which can boost consumption, especially of a lot of the discretionary kind of consumption. So I expect overall this budget to be a lot more growth oriented than what even the last budget was.
Nilesh, where should the government be spending right now? I mean, one would think the SMEs, MSMEs, rural spend, that's, or healthcare services, for instance, healthcare infrastructure, let me put it like that, would really be the need of the hour. But from a market perspective, would spending for these segments, will it actually please the markets? Because not all of them have a multiplier effect.
Yeah, so clearly it will have to be in a way very prudent, and in a way what we say basically when we kind of look at private companies, it will have to be both prudent and capital efficient. That's essentially very, very important, rather than just doing some very blanket, income transfers or giving any of those other kind of benefits. Instead of that, it should ensure that whatever spending happens is more of a capital nature versus essentially of a revenue nature. So that to me should be essentially the overarching philosophy of any kind of increased spending. Is more spending required? It is required. Is there room for it? There is, given the kind of buoyancy that we're seeing in tax collections. And if the privatization and disinvestment process in a way gains momentum further, then obviously in the next 1.5 years, you could see more collections from there as well. And it would be very, very important that that money, that capital allocation, is done in the most prudent and efficient kind of manner. Because I think the expectations are that the economy should basically be growing north of 8%. That's also the need of the times. There will have to be that extra bit of spending which will be required to provide that multiplier effect on the economy. In addition to all of this, clearly areas like housing, infrastructure, education, health, and most importantly of all, investment in internet infrastructure, I think is kind of the need of the current times. So I think it's going to be a whole bunch of these areas which is going to invite the attention of the policymakers and of the budget.
That's the other thing, right, Nilesh? I mean, looking at the market construct right now, do you think just lack of bad news is enough? Because we are in any case aligning ourselves with the globe. We are not really working on our own internals. I mean, every night before going to bed and every morning, as soon as you wake up, you're only tracking what the global markets have been up to, because that's going to dictate how your trading day is going to be.
Short term, of course, the global cues do matter, and of course the areas like interest rates, liquidity, all of that clearly matters. But what it looks like is that this time around, India seems to be in a relatively better sweet spot, so to say. Clearly with the kind of reforms which are essentially getting introduced and which are getting unleashed, and the fact that we're coming off a low base in terms of the consumption and our growth rates of the past, clearly it looks like that, it's in fact when there is challenges in the global arena, and if India within that in a way ends up shining up, clearly then there is a lot of global liquidity which can come back to India. Keep in mind that for the last 6 months, global investors have been pulling out capital from India and from their investments in India. And that's something which could pretty much reverse if basically the world sees us sustaining those 8-9% growth rates, because that's basically going to contribute to corporate earnings. And where there is growth in corporate earnings, there are better valuations and higher multiples. So on the whole, while yes, in the short term and maybe on a day-to-day basis, global cues will matter. But I expect that over a period of time, maybe over a couple of quarters or so, India will again come up as a strong outperformer, driven by higher growth and higher earnings. So on the whole, while the global outlook does look a little challenging, but clearly believe that India looks a lot more promising versus where we were several years ago.
Nilesh Shah, back to you. This question is coming your way. My ticker team is insisting that I should ask you the following question because they are keeping a flash ready, which is Nilesh Shah's best budget idea. You can fill in the blanks, Nilesh Shah.
No, I still believe the best budget idea is going to be the Nifty. If you really looking at it in terms of just the budget and the impact on the market, I still believe it's the Nifty. And that's because essentially it's a great environment. I mean, if we do have a combination of both a focus on growth as well as fiscal prudence, then that's going to be a great time for essentially financials and therefore the market as well. So my view is that overall, we kind of continue to be in a very, very strong uptrend, and what this budget could potentially do is only reinforce that uptrend, and if at all, make it even way more stronger than what we have seen in the course of the last 1 month. So overall, I think we remain extremely positive in terms of the budget and what it could and how it could impact the markets.